Traders, we found a scalping strategy that generated over 800% in profit in just a week. We tested it on the Bitcoin 1-minute time frame and its win ratio was close to 100%. In this short video, we will give you a full tutorial on how to build this amazing indicator setup as well as how to enter trades. Before we start, please leave a like for this video. Also, subscribe to Magic Indicator Strategies for more videos like this in the future. The strategy we're about to teach you in this video works well in small time frames like 1 minute, 5 minutes, and 15 minutes. It is suitable for scalping cryptocurrencies, stocks, and Forex. Most importantly, it is easy to understand and it doesn't include a lot of rules. We will show you how to build this indicator setup at the end of this video. For now, let's understand how these magic indicators work. The system includes 3 free TradingView indicators and a volume tool that is not considered a separate indicator. So for those of you who have a free TradingView plan, this strategy is just right. The very first indicator we would like to cover is this buy and sell script. The tool is based on the Fu indicator. Its goal is to find the most accurate trading signals based on price momentum. We will use this indicator for the first confirmation. It means that if the other conditions are not met at the time we receive a buy or sell signal, the signal is cancelled. The second indicator we have on the chart is a long-term exponential moving average. An exponential moving average is a type of moving average that places greater weight and significance on the most recent data points. It is also referred to as an exponentially weighted moving average. An exponentially weighted moving average reacts more significantly to recent price changes than a simple moving average, which applies equal weight to all observations in the period. This tool is used as a baseline that filters the trend. If the price is positioned above the line, buying signals are your best bet. If the price is closed below the moving average, only look for selling opportunities. The third indicator we use in our strategy is called the Legare RSI. This is a modified version of the well-known Relative Strength Indicator, or RSI. Created by John F. Ehlers, the Legare RSI reduces noise and minimizes lag, resulting in a more responsive technical indicator with fewer whipsaws. The Legare RSI applies a smoothing filter and is based on the original Legare filter. Specifically, the Legare filter uses an EMA which is smoothed with a damping factor. The indicator consists of a blue line and upper and lower levels that are set at 80 and 20. When the price is overbought, the blue line is typically above the 80 level. On the other hand, when the market is oversold, the line is below 20. The main idea behind this strategy is to buy in a confirmed uptrend. However, to make sure that we're not buying at the top, we use the Legare RSI indicator. And the reason we need to check the volume level before entering the trade is to confirm momentum. So the rules for the buy trade will look like this. First, a buy signal must be displayed on the chart. You must wait for a candlestick to close, otherwise the signal is not confirmed. Second, at the time the signal is issued, the price bar must be fully above the EMA. Third, the Legare RSI must be oversold. Once these conditions are met, check the current volume. It must be bullish. It also needs to be greater than the most recent bearish volume. You can compare them by looking at the numbers at the top. If bullish sentiment is present, you can safely enter a long trade and set your stop loss at the recent swing low. Target 2 times risk. But make sure to adjust the stop loss to the break-even level as soon as you make half the profit. Let's see one more example. Watch how the price moved sharply to the upside and then a pullback occurred. A lot of traders closed their positions at this price, which caused such a decline. But the price is still being above the moving average, which indicates that the trend is not over yet. Traders, if you follow the rules and execute the trade in the way we just showed you, you are set for success. Now let's understand the short positions. First, there must be a sell signal printed on the chart. Second, the price bar must be fully below the exponential moving average. Third, the Legare RSI must be overbought. Lastly, check the volume level. The bar must be red, which indicates selling pressure. It also needs to be greater than the most recent bullish bar. Once you have checked the volume and the requirements are met, place a sell order at the start of the next candle. Set the stop loss at the recent swing high. The profit target will be set at 2 times the risk. Make sure to adjust the stop loss to the break-even level once the price has made half of the way to the target. Traders, I hope the rules are clear. Now let me demonstrate how to build this setup step by step. First, log into TradingView and open the charts. Head over to the Indicators section and type in Vimanchu Swing Free. Select this indicator, which was created by Jazal. Access the indicator's settings and change the swing multiplier to 1.5. Open the Style section and uncheck everything except the buy and sell labels. For the next indicator, add the exponential moving average. Its length will be set at 200. Change the color to white. For the third indicator, add the Legare RSI. Pick this one that was created by Kavanch Asbiljic. Open its settings and in the Style section, change the colors for these bands. Lastly, open the Indicators tab one more time and search for volume. Select the volume tool. That's it, the setup is ready. Best of luck and see you in the next video.